Hello traders, this is Dave with the SPY Super System Options Trading Room and Alert Service, also known as the Compass System. And I'm going to do a video tonight on the indicators that the SPY Super System piece of software supports and how we use them to trade intraday trades on the SPY, the Q, the IWM, and intraday stocks if you want, and then also how to use them to find the best swing type trade setups. And I want to kind of go into some detail on each of those. So we'll take this, won't take too long, but I do want to get through this and give everybody an opportunity to look at these indicators again and understand how we use them and what the criteria is for these trades. All right, so first thing I have to do is do the disclaimer. All signals of trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, we'll get started here. First thing we want to cover is, as a profitable trader, we need an edge. What's the edge? Our edge is, we have 4 of them. We use the SPY Super System software to identify when institutions are in trades and when they're not. It's very critical that we follow institutions into trades and not be in trades when the institutions aren't pushing the trend. Then we trade relative strength and relative weakness, or relative weakness. This is not RSI, it's not to be confused with RSI. Relative strength is if the stock is moving up with green candles and the SPY is moving sideways or down, it's got relative strength. It's outperforming the SPY to the upside. And relative weakness, the stock would be outperforming the SPY to the downside. This is really important when you're trading stocks, options on stocks. You want to take relative strength stocks for longs, relative weakness stocks for longs, as long as all the other criteria is set up. We want to trade with the market trend if there is a trend, and then we want to buy near support and sell near resistance. Get into these trades as close to support or resistance as you can. Okay, now we have a couple of rules to trade by. We trade the best and skip the rest. We're only looking to take the very best trades we can find, the very highest probability trades. We're not interested in trades that are 50-50. It's just not worth it. Then we also determine that our objective is not to make trades. Our objective is to make money. And this is meant to keep people from over trading. It's one of the biggest problems that retail traders have, over trading. They get impatient. They just can't sit in their hands and watch for a while. So keep in mind, your objective is to make trades, is not to make trades, is to make money. And we do that by only taking the very best trades. Maintaining discipline is critical. This is, as I described, just as I go through the criteria tonight for the SPY Super System setups, for intraday trades and for swing trades, and the strategies that we use, which indexes, which options to take, which expiration dates, all that is laid out in other videos, but it's important to maintain discipline. Maintain discipline means only take the trades that you know are going to work 85% of the time or more with the setup that we've got and the strategy that we're using. There's quite a few strategies, but that's a very important. Maintaining discipline, remain patient. The hardest thing for retail traders to do is remain patient. Again, they overtrade and they just don't have the ability to sit out and wait for these trades to set up to come to them, and they'll have a winning trade, and then there'll be no more good trades, and they'll basically just lose all their money that they just made taking trades that they shouldn't be in. All right, so very critical. Maintain discipline, stick with the strategies in the setups, and remain patient. The Compass System, or the SPY Super System as it's called now, this is a piece of software that goes on Thinkorswim that helps us identify when institutions are in the trade or not. So it identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they succeed. If you've got a nice looking setup on a 5-minute chart, but the SPY Super System is telling you that the institutions are not driving this right now, you don't want to be in the trade. You want to wait for the institutions to be in that trade. Again, it does this by identifying when institutions are driving the move and when they're not. And it does analyze quite a lot of complex trading data and displays the results in easily identifiable visual format. And if you're in my room or the alert service, or you've seen this before, you know what they look like. I'm going to show you some of those charts tonight. The key thing here is this visual element makes it possible for even new traders to find these high probability trade setups. So how we get an edge over retail traders. We only take trades that are being driven by the institutions, as I keep repeating. It's very important. Trade stocks that have relative strength or relative weakness versus the SPYs or the Qs. This is not so important when we're trading the indexes. We're just going to trade the indexes against each other, which index is the strongest, which is the weakest. But when you're trading stocks, if you have 2 or 3 good stocks, you want to take the one that's got the best relative strength for long, best relative weakness for shorts. And you want to trade in the direction of the overall market trend. If you do this, you're going to be ahead of about 99% of the retail traders out there, who most of them have no idea whether institutions are in the trade or not, and most of them don't trade relative strength and relative weakness. I mean, I've been talking about this for a long time, for years, but a lot of people, it's just not something that's shared very often, apparently, because I don't see an awful lot of people that are focusing on that. How does this give us an edge? Well, again, our trades are going to be supported by institutional buying and selling. They'll be outperforming the SPY or the Qs, and they'll be moving in the direction of the overall market. So this is a big edge that we get over other retail traders. And keep in mind, we're only trading against retail traders to make money. We're not going to take money from institutions. Regardless of what you've heard, we're not going to beat the institutions. We're taking money from retail traders because we have better information than they do. We have better indicators than they do. We're more patient than they are. So that's how we make money consistently. Okay, and just a quick recap here of how what moves the market. These little marbles here, this is us retail traders, me and probably most everybody watching this webinar. We're retail traders. When we're the only ones in the trade, for the most part, in other words, the institutions may be in there, but they're not in there with any force one way or the other. When we're just trading, then we're just trading against other retail traders. All you're going to do is get a lot of chop and a lot of chaos. You're going to have no trends. We don't have the ability to create trends or reverse trends. That's only done by these folks right here, the institutions, which are the big investment banks, Goldman Sachs, JP Morgan Chase, Wells Fargo, all the big investment banks which have billions of dollars to trade and invest. They have trade desks where they have some humans trading, but most of their trading is done by computerized programs called algorithms or algos, and that's where most of the volume in the market comes from. Now, in addition to the investment banks, institutions are also include hedge funds, billions of dollars there. They also can be involved in it. So can pension funds for police, firemen, state workers, lots and lots of big pension funds. And finally, the mutual funds, T. Rowe Price, Vanguard, all these people have billions of dollars. This is what makes up institutions. This is the people that can drive the market. We can't, they can. Our job is to just find out when they're driving the market and when they're not. When they're driving the market, that's when we want to be on the trade. We're just basically riding their coattails. Okay, this is the compass system, or the SPY super system. It also has scanners on it, but I've separated, took those out just to show you what we're looking for on the SPY super system as far as the indicators are concerned. One of the things that's on here that we're using on the 5-minute chart. Now this is on a 5-minute chart. This is the VWAP, volume weighted average price. This is critical on 5-minute on trading off of 5-minute charts. Intraday trades on stocks or indexes. This is the support or resistance level that we key on. It's very important. The next one is the 15 EMA, which is right here, this little thin red line. If the stock price is down below the VWAP, but the 15 becomes the support or resistance, this is our second support or resistance level that we use. So we're going to be trading off the VWAP, or we're going to be trading off the 15. Those two are the support resistance levels that we're going to be using on the 5-minute chart. Okay. Also on here, you see a couple of things like this. These I don't have identified, but this is a pop signal or a pop out of the box signal. This is identifying when a particular stock price is breaking compression. Downside, it would have a blue candle. Upside, it has a red candle over here. All right. So that's in there. This is called the trend dots. I don't use these. They just kind of follow the trend. They can, if they break through the actual trend itself, sometimes that's an indication that it's time to go short if it's breaking down through it. I'll go long if it's breaking up through it. To me, that they come in too late. I'd much rather get the trade sooner than that. This white line that you're going to see from time to time on the charts, this is a pivot point. This is the only pivot point I have on the chart. This pivot point is very, very effective on the 5-minute chart. It's not something I trade off of, but if I'm trading into it, from coming down to it from above or coming up to it from below, I want to be aware of how close it is, because it's a level that I'm going to be interested in taking profits when the price gets there. So these are the 3 indicators on here. There's 4 actually, but this is the long-term trend. Again, the 15 is the short-term trend. This is the long-term trend, which you can see is bearish here. This is a multi-time momentum, multi-time frame momentum. This is looking at the momentum on 3 different time frames. This is a current time frame momentum. We're looking at a 5-minute chart. This is for the 5 minutes. If this is the 5 minutes, this is the 5, the 15, and the 45, which you see are all in red at the point. But you notice that on this current time frame momentum right here, it just shifted from red to blue. The color system is red and yellow are short, blue and green are long. All right, and this last thing here, this is the actual momentum oscillator that runs from 0 to 100. This shows you where it is and what kind of a slope it's on. So that slope can tell you how good this bullishness is. Notice how it's switching from red to blue. That's showing an indicator or an oscillator that's moving up, but it's not moving up very quickly. So that's a little bit weaker than if the oscillator was moving up quickly. So this is all we really need to trade the intraday trades on stocks or on indexes. All right. We'll obviously we got to look at the daily chart if you're taking anything that you might take overnight. But for right now, we're talking about trading the indexes, the SPY, the Qs, and the IWM. For short-term intraday trades, what we call a SPY super system methodology, these are what we'll be looking for. All right, the VWAP important, the 15 important, the current time frame momentum. This is the only one we need for intraday trading. We don't even have to look at the multi-time frame for intraday trading the indexes. Okay, now this is one template that you get if you buy the software, and you can use this one. And this one you can use for swing trades or intraday short-term trades. But if you're just interested in using the SPY super system for indexes, for example, short-term trades on the IWM, the Qs, or the SPY, then this is the template you can get. It comes with the system. You can swap them back and forth. Again, you can see it's got the VWAP on here. It's got the 15 EMA on here, the two levels that we use for support and resistance, and it's got the current time frame momentum. That's the only indicator that's on there, and as well as the oscillator. And you can see here's your colors. We go from green, which is buying, to yellow, which is selling, to red, which is continuing to sell. And you can see the oscillator coming down, and then we go back to blue again, right? And you see blue this is where we would be interested in taking it long. By the way, as this goes from red to blue, the oscillator is moving up, and the stock is breaking above the 15 EMA right here. This would be an entry for a long on the SPY, coming across this 15, and the 15 would become your stop. So as long as it closes above the 15, you can stay in it as long as you want. You can see it's moved up nicely. You would probably be out of it right here. It's breaking compression, and you're starting to get some red candles. But that's the template that you can get with the software. It comes with it. You have this template or this template, and you can swap them back and forth. I use this one all the time because I'm just looking at the current time frame momentum for the daily chart, but I need these other indicators for any kind of swing trades I'm looking at. But if you're only trading for short-term swings, short-term trades off the Qs of IWM and the SPY, this is all you really need. Okay. Now, how to identify high probability trade setups using the SPY super system? This is losing these indicators. All right. This is for swing trades. This is a criteria for high probability swing trade setups. All right, I think I did this backwards, but anyway, this is the criteria for high probability swing trades. With a swing trade, your current and multi-time frame momentum on the daily chart should be aligned. Right, on the daily chart should be blue or green for long and red or yellow for short. That's where you want to start from. If you like a stock long, you've got to have blue or green on the multi-time frame and current time frame momentum. You've got to know that the institutions are in there. That's how you identify it. The daily chart must be technically bullish for a long and technically bearish for a short. And we'll talk about that in a minute when we're talking about swing trades. But the daily chart, you've got to be able to identify daily charts that are bullish and daily charts that are bearish. Technically, it's very important because you don't want to be going long a stock that has a bearish daily chart. It takes away all your flexibility. So that's the second thing you need for your swing trades. All right, again, the multi-time frame and current time frame momentum. If you want to go long, it's got to be blue, both got to be blue or green. The daily chart must be technically long. Okay, the daily support and resistance levels must be identified to determine if there is enough room to justify the risk of taking the trade. In other words, if you're getting into a trade, and we're going to go over some of these on charts, when you're getting into a trade, and let's say you're on the daily chart, 200-day moving average is 20 cents away, all right, from where you are, above where you are, and you're trying to go long. That's not a good trade. You don't want to be taking a trade long when your resistance is that close. You don't have enough room to the upside to justify taking the trade. The risk reward is not there. If you don't have any resistance above for a good long, 5, 10, 15%, then you're in good shape. So that's important. And for on the short side, you would be looking at support for the resistances on the long side. In other words, stock coming up toward the 200, that 200 would be resistance and is likely to stop the move. Right, so that's important that you look at the daily support and resistance for swing trades. If you have a recent Heikin-Ashi reversal candle on the daily chart, that's going to add to the probability of success, and I'm going to show you a bunch of those. All right, this is really important. If you get a Heikin-Ashi reversal candle, that gives you, the Heikin-Ashi reversal will give you a confirmation that the reversal is true, that the confirmation that's taken place because of the way Heikin-Ashi candles are structured. And I have a video on Heikin-Ashi candles if you don't know what they are, but they basically are two candles together. And when you get a Heikin-Ashi reversal candle, then you have a confirmation of that reversal. You don't have to wait for more candles. That gives you the confirmation. And the last thing on the high probability trades, swing trades, be aware of when the earnings are going to be released. You don't want to be holding these things over earnings. So when you're buying an option on them, you want to buy an option that either expires before earnings, or if you buy one that expires just after earnings, make sure you're aware of it and you exit the trade before the earnings come out. Okay. And there's some good reasons for actually buying a call, for example, that expires after earnings. You're going to pay more for it, but it's not going to be impacted as much by time decay if the stock starts to pull back, because there's premium added into that premium. There's money added into that option premium because of the earnings coming up, and that will stay in those options until earnings are released. So you're going to suffer less of a loss, but you're going to pay more for it when you take it. Right. So that's the criteria for high probability swing trades. Right. A little different. So this is the criteria for high probability SPY super system intraday trades using 5-minute candles specifically for the indexes. You can do this on stocks, but I'm going to specifically talk about indexes here. I do trade these off of stocks sometimes, but they would have to be intraday trades. But I'm going to talk about the SPY, the Q, and the IWM. Right. So here's the criteria that we need. The current time frame momentum, just the current time frame momentum, has to be blue or green for long trades and yellow or red for short trades. That is it. Now it can just turn from red to blue on the candle that you're getting in for, or it could be already blue or green. But it needs to be bullish, blue or green if you're going to go long, and red or yellow if you're going to go short. It must be. All right. The VWAP is going to be used as a support and resistance level for the trade entry, as we talked about. If you're taking a stock that's down, maybe it's green for the day, but it's below the VWAP, you're not going to take that trade until the stock goes through the VWAP, breaks through the VWAP. That will be your entrance, break through the VWAP. The VWAP is support and resistance, and that's our entry for the trade. The 15 EMA is also used support and resistance for trade entries if the price is moved away from the VWAP. If it's away from the VWAP but near the 15, this becomes our support and resistance level. This now becomes the criteria that we use for entering the trade. So both of these, VWAP and 15 EMA, they both are entries for getting into a trade long and short. If the VWAP is the best, but the 15, if the stock is above the VWAP and it's likely to come back down to it, then you trade off of the 15. Market trend, this is important. And I'm talking about the 5-minute market trend. This is very important. If it's choppy trades, they're going to have a lower probability, and the size and profit target should be smaller. So if you're in a choppy market on the 5-minute chart, you're just getting a bunch of up and down moves, you have a lower probability of success because you haven't really got a trend to get into. You're not trading with a trend. If you do take it, you want to make your size smaller, and your profit target should be smaller because it's likely to reverse. This is not the best trade, but you can still make money trading these things in a choppy market, but you don't have much of a trend to go with. If they have a trend, it's great. Now, when you're trading the index, the SPY, the Qs, or the IWM, you want to take the strongest index if you're going long. In other words, if the Qs are up 1.5%, the SPY is up 0.8%, and the IWM is up 0.5%, you want to trade the Qs. You want to trade the index that's up the most for the day. And you want to trade short the one that's down the most for the day. Okay, because this is the type of relative strength and relative weakness. They're relative to each other. So if you take the Qs long because it's the strongest, that would be the one you'd want to take. Now, the other criteria that's important, however, is when you're looking at the Qs, the SPY, and the IWM, and you say, okay, the Qs are the strongest right now, I want to take these long as they break above the VWAP. You've got to identify where the nearest support or resistance level on the daily chart is, and use that in the selection of the index to trade. So when you're getting into the trade on the 5-minute chart, you've got to know on the daily chart, are we close to the 50-day, the 100-day, or the 200-day moving average? Are we close to some resistance or support level on the daily chart? Because that's likely also going to be an indication of where the stock likely to fail. So it's really important to know where the support and resistance level is. So when you're picking the index to trade, you want to take the strongest one as long as it's got plenty of room to the next resistance or support level. If it doesn't, then you want to fall back to the next one that's the strongest and see how close the support and resistance levels is for that. So you're taking a look at the strongest index, and then you're looking to see what's it likely to bump into, either going up or coming down, that's going to limit my profits on it. All right, so very important. And then on the 5-minute chart, use a Fibonacci reversal candle for the entry into the trade. This is going to give you confirmation that the reversal of the trend has occurred. All right, so this is important. If you're using a Fibonacci candle and the stock breaks through the VWAP with a Fibonacci reversal candle, which is going to be a flat bottom on the candle, then you're getting in basically on a confirmed reversal. If you're just trying to take it off of regular candles, it's going to be much more difficult. Now, once you get in and you're in it off of that Fibonacci reversal candles, you want to shift to regular candles so you can track the trade price or the price action on a regular candle, so that you can detect when the momentum is starting to fade, because the momentum, losing momentum is going to take longer to show up on Fibonacci than it is on a regular candlesticks. So use a Fibonacci candles to get into the trade, but use regular candles to get out of the trade. Okay. Now, I just want to cover something as far as momentum is concerned, because momentum is really, really critical, and it's important to understand what we're measuring with momentum. All right. Momentum is not just a stock that's stacking green candles or stacking red candles, which would be weakness, relative weakness. That's not how it's measured. The way you measure it, the way it's measured is this is a candlestick here. What you're looking at, this is the open, this is the close, this is the high. What you're looking for is the candlesticks click by, you're looking for the close of that particular candle to be closer and closer to the high of that candle. As the close of the candle gets higher, closer to the high, that is what momentum. That's what we're measuring momentum, and we're measuring it across 3 different time frames. If we've got a multi-time frame momentum and a current time frame momentum that's green, that tells us that the candlesticks on the 5-minute, the 15, and the 45-minute are all looking like this. They've all got closes that are getting closer to the high for those candles. Okay, and here it is vice versa. Notice on the deceleration side, or the weakness, you've got the close getting closer and closer to the low of that candle. So that's how momentum is measured. That's so when you're looking at the momentum indicator, this is what we're looking for, right? This is what it's measuring. And this is kind of just a triple screen. This shows you, this is like the 5-minute chart, for example, and this is the momentum. If we see this and this is on the 15, and this is on the 45. You see how all the indexes are moving up, all the momentum is moving up, all three of them. That's your indication that you've got green or blue on the current time and multi-time frame momentum. Right, so just so you understand what it is we're looking for here. All right. Again, here is the criteria. I'm going to go over the probability, high probability trades for SPY super system intraday trades using 5-minute candles for the indexes. And this is the same thing I just talked about up there. I'm just repeating it here. All right, we're looking for current time frame momentum, blue or green for long, yellow or red for short, etc. Use the VWAP for support and resistance. If it's gone high there, use the 15 for support and resistance. So these are the same criteria that we just said before. All right, so we're going to look at some stocks here on a live chart. So let me get the system up here, and I'm going to just back these the scans out of the way here. Okay. All right, so the first thing I'm going to look at is, and I wrote down there what it was, but I've got it written down here. We're going to look at the Qs. All right, we're going to look at the triple Qs, and I want to make sure I'm on yesterday. Yep. All right, so this is the Qs for Friday. All right, this is the Qs for Friday. Now, at 12:50, this is I want to go to the 5-minute chart. All right, 5-minute chart. All right, so here are the Qs on Friday. I'm going to go back and look at 12:50. 12:50. All right, so let's go back to 12:50. This is what we're looking for. Now, again, we're only looking for the current time frame momentum. Right, so this is what we're interested in right here. See the selling on the Qs? Right, see, here's 12:50. See the 12:50? See what it did? It went from red to blue. See the oscillator moving up? It went from red to blue. That's institutions now are coming into the trade, right? Now these are Heikenhachi candles. Here's the VWAP right here. See the VWAP right there? See this flat bottom? That's a Heikenhachi reversal candle right there. You get wick and tail here, a little tail here. That's a Heikenhachi reversal candle as the stock breaks through the VWAP. Okay, so this would be your entry on the triple Qs at 12:50. So then you get another Heikenhachi candle with a flat bottom, another one, another one, another one, and this is probably where you get out of the trade. You start to get some red, you're losing some momentum, even though it's still green, you would probably take it off right there. Now, if you stayed in it, because the 15 is your support, is the area you wouldn't exit this trade, you wouldn't have to exit this trade unless the spot price closed below the 15, which it never did. So theoretically, you could have gotten this, but I wouldn't have stayed in. I would have got out right here. Because of the fact that it was losing momentum, and you can see we went to yellow, so we probably don't want to be in there now. Now you could actually come in and enter again right here if you wanted to, as it breaks back above the VWAP, above the 15 again with the Heikenhachi reversal candle, but just a little run. Now this was a very choppy day Friday. It was hard to take anything, but this is the kind of trade you're looking for. A Heikenhachi candle with blue or green on the current time frame momentum with the break above either the VWAP or the 15 EMA. All right. I also want to look at the IWM. Notice I'm not looking at the daily chart in any of these. Daily chart is only going to be for swing trades. All right. So this is the IWM. I got this recorded at a time I got it written down. 11:15 is the key level on the IWM. Now IWM was pretty weak on Friday. You can see we're below the VWAP. It was red for the day. So where do we want to get into this thing? All right, so here at 11:15, it's right there in this candle. See how we're kind of moving along with the doji? See the flat top? That's a Heikenhachi candle with a flat top. That's a Heikenhachi reversal candle right there. Okay, that's a Heikenhachi reversal candle. I'm pretty sure. Let me make sure I've got Heikenhachi. Yeah, I do. All right, so that's a Heikenhachi reversal candle breaking below the 15 even with a pop out of the box signal telling you that it's breaking compression. Our indicator's gone yellow. It went from blue here to yellow here, but we're not going to enter there. We're going to wait until we get a Heikenhachi candle that tells us to enter it. So this is where you would get in. And then you're going to stay in it as long as it stays below the 15, which it did. And then right here, you're probably going to get out. You start to get wicks and tails and a green candle, your exit's going to be right there. Now you didn't have to get out because you're up money, it's below the 15. You could have stayed in it until it closed above the 15, which it never did. So you could have ridden it down a little bit further, or you could have taken it off and then re-entered right here, okay, for run. Notice it turned around and headed back up over here. But that's a trade for the IWM. And on the SPY, it really wasn't much on the SPY. So I'm going to go back to Thursday on the SPY. All right, so this is that's Friday. All right, here we go back to Thursday, right here. Okay, and Thursday I'm looking at the SPY at 155, 155, right? So here's 155 right here on the SPY. Notice it was already bullish. If we go back and look, see how it was bullish here? We went bullish right here, but we didn't really have a Heikin-Achi candle of any significance. It was sitting right on the VWAP. So the entry for me would have been right here at 155 as it breaks above the 15 with a Heikin-Achi reversal candle. See the Heikin-Achi candles here? You notice they got tails on them. This is a flat bottom. That's a Heikin-Achi reversal. Now this was too. And if you took it, you'd be okay. You just would have been sideways for 3 candles. But this is the one because this was a bigger candle than this one. So this is what I would have taken it right here. I did take it right here actually, and right off the 15. It's even got a pop out of the box symbol right here on this candle. Then you get another Heikin-Achi, another Heikin-Achi, another Heikin-Achi, another Heikin-Achi with flat bottom, flat bottom, flat bottom, and this is where I get out. I'm starting to lose some momentum here. I'm getting out. Now you could stay in this. Notice the 15 is still sloping up. It never broke below it. You could have stayed in this the whole time, right? Could have stayed in this the whole time as it kept on moving up, but I didn't. So that was again, that was at 155 right here. That's the entry. So that's the SPY super system. That's how you take these trades. That's what you're looking for. Heikin-Achi reversal above the 15 or above the VWAP with your current time frame momentum, blue or green for long, red or yellow for short. Okay, that's the setup, and it's not that complicated. It's just that a lot of times when you're really choppy market, you've got there's some days you don't get a lot of these, and then some days you'll get some nice ones that you can really run. And notice the market's been very choppy recently, but that was a pretty good trade there on the SPY right there. There really wasn't too much you could do here to the short side because your VWAP is down here. Even though it was a short setup, you don't have very much room to the VWAP. And you see how it went down. By the way, you think the VWAP is not important. You see how the candle went down and touched it, touched it. This is what the institutions use. They use these VWAPs. Look at the touches on the VWAP right here. So I mean, it's pretty amazing. It bounced back below it, see, but then see the hammer bars right back again. So, all right, so that's the SPY super system. Those are the 3 that I pointed out. There's lots and lots of them you can look for. I mean, I can keep going back in time to find other ones. You know, once you've noticed this, is this hard? No, look at this. Well, this one right here on this day. This was the 12th. All right, so here's red going to blue. Heikin-Achi candle going through the 15 right off the VWAP, going through the 15 with a pop out of the box symbol. You take it here, flat bottom, flat bottom, flat bottom. This Heikin-Achi candle moving up. Notice you're getting close to the pivot point. As soon as you start to lose momentum when you're close to the pivot point, you're out. You're going to take your profits right there. But that's a pretty nice trade right there. All right, so that's what you're looking for here. So you can find these all day long after the fact, but finding them when the market is live is a little tricky, because obviously if you get in here, you don't know this is going to happen until it happens. This could have easily reversed and headed back down again. But the key here is if you get in right by the VWAP or right by the 15 and the stock price closes below the 15, you're out of the trade. How much have you lost? Very little, because you're out because it's closing below your support level, and you got in right near support. That's why getting in on support or resistance is so important to be in right near support, right near resistance. But that was another one of the SPY. And again, you can look at these things, all day long. This was the open right here on Wednesday morning, big flush down. I'm not going to touch any of these things. Notice it's above the VWAP, but there's nothing that's really any good here. This is going back and forth. We get a blue here, and we get a Heikin-Achi reversal to the upside right here. So you could take this as it goes through the 15. but it's very choppy. You're going to be out right here. You're just going to get, you know, you might have made 20 cents on that, $25 a contract or so. All right, so that's what we're looking at on the SPY super system. All right, so now let me go back to the okay. So those are, and again, if you want to look at them, I put them in here so they're in the webinar itself. So you can go back and take a look at those particular candles on the 5-minute chart. Now, let's talk about swing trades. Okay, this is going to be a little bit different. High probability swing trades. And this is the same thing I mentioned just earlier. The current and multi-time frame momentum should be aligned on the daily chart. Blue or green for long and red or yellow for short. You don't want to be taking anything that's got a current time frame that's green and a multi-time frame that's red. You don't want to be doing that. You want them, both of them, red or blue, and I'm sorry, red or yellow for short, green or blue for long. The daily chart must technically be bullish, and we're going to take a look at some stocks here in a minute. Then we're going to take a look at them on TC2000 so you can easily see whether these are bullish stocks or not. The daily support and resistance must be identified to determine if there is enough room to justify the risk of taking the trade. How much room, if I get into this trade, where is it likely to stop me out if it's heading up? Not for a loss, but if I'm taking it long and it's moving up, how much room does it have to the upside before it runs into resistance? That's really, really important. If you've got a recent Fibonacci candle on the daily chart, it's going to add to the probability that the trade will work. And be aware of when earnings are going to be released so you don't hold over earnings. Right? So there is that criteria for high probability swing trades using the SPY super system methodology. All right, so these are the stocks right here. All right, now I'm just going to leave this up here, and I'm going to go look at a TC2000 chart, but I'm going to this is going to be in the webinar, so you'll get this when the webinar comes. But I'm going to pull over the SPY super system. I'm sorry, my TC2000 chart. All right, now first I'm going to look at this one. This is FTNT. Okay, that's the one we just talked about. All right, so if we go to Fibonacci candles on FTNT, what you see here is this is a Fibonacci reversal right here. See this blue candle? Again, this is my TC2000. I color code these candles in TC2000. Blue means that I've got a compression being broken. The stock is breaking to the upside, breaking compression. If it's green, it means it's bullish, but I'm not breaking compression. If it's pink, it's breaking compression to the downside. If it's red, it's just short. It's just bearish. But notice here we have a nice move up in FTNT, right? And then we get this little flush. And this white line, by the way, is the 8 exponential moving average. This orange line is the 15. These are critical ones for me when I'm tracking trades on a daily chart. But notice we had a Fibonacci reversal, and we got another Fibonacci reversal follow through right there. Now let's take a look at a regular chart for FTNT. Here's FTNT with a regular chart. All right, is this bullish? Yes, it is. You've got a nice bull flag here. See the big volume moves up. See, it comes down to the 8. This is the 8, the 15. When the stocks get extended from the 8 exponential moving average, they're likely to come back down to it or move sideways until the 8 comes up to them. Right, so it pulled back. So it's just moving along the 8 nicely. It fell down here and fell below the 8, fell below the 15, fell below the 50. Got a weak, but it came right back again. And right now it's riding up the 8. You see this how it's riding up the 8. Stock went back with a hammer. That's a hammer bar right there. Went down through the 8 near the 15, bounced, and we've got multiple Fibonacci candles in a row in this thing right now. This is a long setup. And if I'm looking at my daily chart, do I have any real resistance? Not really. This thing is your breakout level is right here at the top of the candle. All right, it actually broke through the top here on Friday. So this is a breakout. It's not only is it a Fibonacci reversal, but it's a breakout. So here's your Fibonacci, and there's your regular candlesticks. Is this bullish on the daily? Yes, in my opinion, this is very bullish on the daily chart. All right. Next one I want to see, and let me just switch back to this for a minute. Let me look at FTNT on here so you'll see. All right, so here's FTNT on. Let's go to the daily chart on this thing. Right, I don't really need Fibonacci candles on this thing. I can use regular candles to show you something. Okay, this is what I'm looking at. Current time frame momentum, multi-time frame momentum, FTNT. See, they're both green. They're both bullish. This thing has been bullish for a good long time, especially on the daily. The multi it took a little while right here on earnings, but now it's green. This is what you're looking for. We're getting a Heikin-Achi reversal. We've got a stock that we know is bullish on the daily chart. We're getting the compass system or the SPY super system telling us that our multi-time frame momentum and current time frame momentum are both green, both bullish, and even our long-term trend is green. Right, so that's what we see on there. And on FTNT, this is the TC2000. This is what I look at to do some more technical analysis. I love this. I mean, the stock is moving up beautifully right here. Right, I took it last week, and then if I was to take this, now I do have earnings on here. It's not till 5/1. Got plenty of time on this. And these are volume. This is volume down here. My volume candles, if they're blue or white, it's above average. If they're just red or green, it's just about average or below. All right, so that's FTNT. Let's take a look at Sharp. All right, Sharp. Now this is one. Sharp is one that I think we're in. Yeah, we're in Sharp. So this is a Sharp trade right here. All right, here's a daily chart on Sharp. All right, let's take a look at Heikin-Achi. You see what we see here? All right, here's Sharp. This was earnings. We're getting a wick and a tail. Now we get a flat bottom candle on Thursday and a continuation on Friday. And it's also breaking above these are horizontal resistance levels. It's breaking above those. So that's Sharp with a Heikin-Achi reverse on the Heikin-Achi. How's it look? It looks very good, right? And then we switch over to regular candles. Here it is right here. Beautiful breakout in Sharp. Could it fail? Sure, of course it can. They can always fail. But this went through this resistance level and confirmed that it's going to stay above there on Friday. And it's riding up the 8. The 8's moving, the 15's moving up. Here's all your 50 right here, your 100 right here. It's all moving up. Beautiful trade on Sharp. And let's switch back over here. Let's look at the daily on Sharp. Now I know I'm going through a bunch of them, but I want to keep going over this. I want you to see the criteria that we're getting. Current time frame momentum, green. Multi-time frame momentum, green. Trend, green. And here's our breakout right here on Sharp. All right, so the compass system or the SPY super system is telling us that the institutions are in the trade. TC2000 is showing us that the stock is bullish. All right, and it doesn't really have any nearby resistance. See anything? Nothing too close. You've got to go way back here into 2021. Right, so that's Shopify. Another one is Citigroup. All right, let's take a look at the Heikin-Achi candles. Here's Citigroup. You see this Heikin-Achi. Now you notice back here when it created a Heikin-Achi reversal, you see how you get like 5 or 6 candles to the upside. This is not uncommon, especially when I'm getting blue ones. I'm getting a Heikin-Achi right at the 8, and it just moves straight up. This was earnings here. Moves straight up. Now it's just chopping around, moving sideways, compressing. All right, but here is the Heikin-Achi reversal. Got one right here, green, but now we get a bigger one on the blue. All right, and our regular chart looks like that. Trying to break out. See that? Nothing close by. Riding along the 8 and breaking out beautifully. Citigroup, another really good one. Let's go back here. What does it look like on the SPY super system? Citigroup. Green, green. Current time frame momentum, multi-time frame momentum, staying green and breaking out right there. Again, so this meets all the criteria that we were talking about. It's really important to find these stocks that are like this. Here's Verna. Okay, that's regular candles right here. It looks pretty nice. Just moving right up here along the 8, drifting. This is just drifting up beautifully. What's the Heikin-Achi look like? Looks nice. Heikin-Achi reversal right here, and now we got a Heikin-Achi continuation. See when we went Heikin-Achi back here, we had 4 or 5 candles in a row. We Heikin-Achi reversal here, 4 or 5 candles in a row. Heikin-Achi reversal here, 4 or 5 candles in a row. It's not uncommon. And this is on the Heikin-Achi, and here's the regular one in VRNA. Notice it's breaking right above resistance right there. Okay, and what does VRNA look like on SPY super system? Verna right there. Green, 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 green. current time frame momentum, multi-time frame momentum, trend, green, green, green. And there it is, breaking out. Beautiful, just a beautiful trade. Again, any of these could fail. Any of these could fail, but they're much less likely to fail than just random stocks that you're choosing. These have very high probability of win rates. Here's BHF. All right, look at this, and this is a little different. This is a big, big move here. See that big candle right there? This is a regular candlesticks. That's a big move on BHF right here. All right, very big move. Now, if I'm gonna draw algo lines on something like this, what I'm gonna do is I'm going to basically try either from here to here, which is showing that it hasn't got there yet, or I'm gonna take this and I'm gonna move it down to here, and I'm gonna move this over to here. That's an algo line that is breaking through. But you can see that it's breaking out. Now let's look at the Fibonacci on this. All right. So here's Fibonacci reversal. Here's a Fibonacci reversal. We're getting a Fibonacci reversal Friday, right? Beautiful, beautiful candlestick here. Big, big volume in this thing. This is all massive amounts of volume on this thing as it comes in here. So is this a good long setup? Yes, it's a great long setup, right, on BHF. And if we look at the compass, the SPY super system, sorry, I keep mixing it up, but I'm so used to calling it the compass, it's actually the SPY super system now. Here it is right here. We got green on the current time, multi-time frame, green on the trend, and we just went blue. We just went from red to blue on Friday on BHF on the current time frame momentum right here. So this tells us that this is we're getting in pretty early on this move, and that's pretty obvious because as we looked at the TC2000 chart, we saw the whoops, where did TC2000 go? Here it is. We saw that we had this big pullback because, man, remember, as you get away from the 8, the further you get away from the 8 exponential moving average, the more likely it is the stock's either going to chop around, wait for the 8 to catch up, or it's going to pull down to the 8, which is exactly what it did. And it went to the 15 and bounced, went to the 15 and bounced, and then broke up on Friday on good volume. A beautiful setup on BHF. All right, so those are the longs. All right, those are the longs. Now let's take a look at some shorts here. It's CNR. All right, this is the daily chart on CNR. You know, you don't have to do too much analysis on the SPY super system to see that this is bearish. You can see it breaking down. Let's take a look at regular candles. Fibonacci candles is Fibonacci, okay? It's Fibonacci. You see the little breakdown here? Compression, 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 breaking down right here, right close to the 15 with a Fibonacci reversal candle to the downside, all right, on CNR. And if we look at that on TC2000, oop, there it is. Now it has earnings on 220, so you have to be aware of that. That's a pretty ugly candle right there on the CNR. And let's take a look from a Fibonacci standpoint. We didn't actually get a Fibonacci reversal. It's pretty close, but we didn't really get one. We got one here, but I would be looking for this to create a Fibonacci reversal on Tuesday when the market opens. That's what it looks like to me. Okay. NOC. It's Northrop Grumman. Terrible Fibonacci chart here. But notice wick here, flat top. That's a Fibonacci reversal on big volume on NOC. Is it bearish? Yes, it's very, very bearish. And if we look to the regular chart on this, it's nice. Now I'd be watching, I have this 431 in here as a horizontal support level, so I'd be watching that. This is what I mean when you're looking at a daily chart. How close am I to support? It's about 431. We're about $7 away, which is still quite a bit on Northrop Grumman. Okay, and again, let's look at Northrop Grumman on the SPY super system. Red, yellow, red. So it's all bearish, breaking down. Okay, that's what you're looking for. You're looking at the daily chart. You're looking at the SPY super system. Make sure the institutions are selling it. Make sure that it looks good on the daily chart on the bearish side. That's what you want. All right. Okay. Now I have another one called Lulu. This is Lulu. Now this is Lulu. right here on the SPY super system. It's bearish, obviously. We got red, we got yellow. It's breaking down. Right, this is Lulu breaking down. So I'm okay on the SPY super system. I'm fine with that. All right, let's see what it looks like on TC2000 for my daily chart. Let's switch over. All right, whoops. All right, so here's Lulu. Now you can see here, this is the regular candles. Here's my Fibonacci candle right here. See the Fibonacci reversal here, continuation, a doji here, and now a continuation to the downside again. But what I've got to be aware of is my horizontal line. You see this horizontal right here at 362.25, 366.25? It's got to break below there. And you see right over here, if you look in here, you see this gap right here? This is where the gap closes. 351 is the gap fill. And it's basically in the gap right now, but you'd want to get below this 366.25. Close it gets below 366.25. You got room down to the gap fill and then to the 100-day right here. That's a pretty nice amount of space, but you don't want to take it until it breaks below that line. This is where I'm saying if you've got to look at where your support and resistance levels are, and if you're close to a resistance level, don't trade it short. Our support level, don't trade it short. Wait for it to break through. All right. That's on Lulu. We'll do two more, and then we'll call it a night. Lockheed Martin. This is the regular candle on Lockheed Martin. Very, very bearish. Very bearish. Breaking down on regular candles, Fibonacci candles. We had a reversal right here on Thursday. Continuation on Friday. So it's in its big volume. Really nice. Really nice. And let's take a look at the. Let's take a look at Lockheed Martin. Oops. Lockheed Martin on SPY Super System. How's it look? Looks pretty good. It looks pretty good. All red. It's selling it off on the daily chart, right? And those are Fibonacci candles. Look at regular candles. Still looks good. Yeah, really nice setup on Lockheed Martin for sure. If I go back to my TC2000 chart, see what I've got. I don't really have any nearby support on this thing. It's quite a ways down. It's got to drop down to around 413, so it's got a pretty good room to the downside. But you notice when it notices when coming down, look at all the reversals that you could catch here for a Fibonacci reversal to the downside. 4 or 5 candles, 4 or 5 candles, 4 or 5 candles. Every single here we only got 3, but this has been bearish for a good long time here. And now we're getting, again, continuation breakdown on this thing. So Lockheed Martin, another good one. And one more I'm going to cover is TEN. All right, this is 10. This is a Fibonacci candle on 10. Here's a wick and a tail here. Here's a flat. This was a Fibonacci reversal on Thursday and a continuation of it on Friday. All right, on TEN. Let's look at the daily chart. The regular candlesticks, very bearish, breaking down below the 50 moving average, the 50 exponent, 50 simple moving average right here. The 8 and the 15 are right here. It's below all of those. It's an oil and gas company, energy sector, so you have to be aware of that. But it's a nice breakdown on this thing. Now I haven't put in any volume lines here. I would have to put in some high volume lines. But you notice there really wasn't much volume, and they have to be white. My candles have to be white to indicate high volume, and I don't see anything close by. This would be the closest thing I see right there, down around 1645. So a pretty good distance down. There's nothing else in midst of this here. You see, it's below all of those. All right, so that's I don't want to get off track here, but that's what I would use. So that's pretty nice on TEN. And again, if we switch over to SPY Super System on TEN. TEN on the daily chart. We see now this is an interesting thing. We have blue here on the current time frame momentum. So we're not going to take this on the the multi-time frame. We're not going to take this till this turns yellow right here. It's blue right now. So this is one I wouldn't take. I got to see this go yellow. Now, if I'm looking at this current time frame momentum on the daily, this tells me that it's switched. And usually when the current switches from green to yellow, the multi-time frame will follow. But I'm not going to touch this until this candle the next candle is showing this as being yellow. If multi-time frame goes yellow, then I would take the trade, but I wouldn't take it right now. All the other ones are all fine. All right, so that kind of gives you a flavor for what we're looking for here. Okay, those are the, again, there's the trades we took. Again, I've got all the criteria in here. I hope this helps you identifying how to trade these SPY super system setups for 5-minute chart using the indexes. And you can actually trade 5 minutes. You can trade stock off of there as well if they line up for the way you want. But even with stock, I wouldn't take an intraday long unless it had a bullish daily chart. But the indicators the indexes, the SPY, the Qs, the IWM, I don't really pay any attention to the daily chart. I'm much more interested in what it's doing on the current 5-minute chart. Right. So there's your templates, what they look like. You get the software, you get these templates, and I hope this is going to help you use the SPY super system to trade both swing trades and intraday trades on the indexes. I think I've laid it out fairly clear here, and let me know if I have any other questions on this, but I feel pretty comfortable that I covered most of the information that I needed to on any of these things. All right, so listen, thank you very much for viewing this. I hope it helps your trading, and I look forward to seeing you in the room on Tuesday. Have a great weekend, everybody.